and welcome. You're tuned into Buy Now, Sell Now on ET Now. I'm Shrishti Sharma and with me Cheryl D'Souza. And viewers, this is the show where you get answers for all your stock-related queries. You know the drill, that you can connect with us live on a WhatsApp number that will be flashing shortly on your top of your screen, as well as you can write to us on our Twitter as well as Facebook pages. But before that, let's have a look at what the markets are up to. So Cheryl, no stopping for the benchmark indices. We are holding in the green, and even the broader markets are supportive today.
Absolutely, Shrishti. If you look at the markets, all-time high. Once again, we've scaled, and this is after 2 days of good consolidation that the markets have resumed their upward trend. We've surpassed 21,500 mark when it comes to the Nifty. You have Sensex that is above that 71,800 mark as well. If you look at the Nifty picture at this point in time, only 7 stocks are actually declining in trade out of the 50 Nifty stocks. So yes, only 7 stocks are in the negative territory, and all of them are actually losing sub 1%. So Axis Bank is a top loser on the Nifty at this point in time, 0.6% downtick coming in for Axis Bank. Apart from Axis Bank, you have ICICI Bank, Sun Pharma among the other set of losers. Let's talk about the gainers then. ONGC is topping the chart, 3.5% uptick coming in for ONGC. You have Tata Consumer, Wipro, Hero MotoCorp, LTI Mindtree, all of them seeing solid gains as we speak. Let's take a look at the sectoral picture then, and let's see what the picture is at that sort of an end. First, let's look at the broader markets, the mid cap and the small cap, and what's happening in that particular arena. Holding on to very strong gains. There's a mid cap index, 9.2% uptake. Small cap also moving in line with the mid cap index. Talking about the sectoral indices then, all of them are in the positive territory. We don't have any of the sectoral losers at this point in time, with the energy index, IT index, and also FMCG index among the top sectoral gainers. So that's the way how the markets are looking like, Shrishti, at this point in time. Strong footing, strong gains coming in for benchmarks.
Well, yes, no stopping for the benchmark indices. But Cheryl, in the past couple of days, we have seen a lot of news flow regarding the QIP's block deal and so on. But as we inch closer towards the new year, let's try and shed some perspective on the fundraising trends this particular year, because we understand that QIPs have raised as much as 13,850 crores in the month of December itself, and meanwhile the capital raised via the IPO stand at 8,300 crores. So let's try and find out all these stocks that have been in focus and what does it mean for the investors as well. We'll try to get a take from our experts as well, but before that, let's go across to my colleague Soumit, who is standing by with some interesting data collated over the years. Take it away, Soumit.
Well, a lot of QIPs, IPOs and block deals have been happening in the market, but do remember that the funds raised so far from all these 3 transactions is still not highest ever. When it comes to IPO, around 11 companies have either announced or will be or have already raised funds via IPOs, and the total amount raised is close to 8,300 crore rupees. And when it comes to the calendar year 2023, nearly 57 companies have raised money via IPO of close to around 49,400 crore rupees. Of this 49,400, nearly 42% was fresh issue and 58% was an OFS, where existing promoters or investors have sold their stake. Now, this amount raised is still not the highest ever, because in 2021 we had seen IPOs worth around 1.19 lakh crore rupees. Now, when it comes to QIP, around 9 QIPs so far in December 2023 have happened, and the fundraise is close to around 13,900 crore rupees. And the amount of fundraise via QIP is not the highest. In fact, it is highest only since 2020, because in 2020 the amount raised via QIP stood at close to 80,800 crore rupees. However, the number of QIP issues that have happened so far in 2023 is close to 44, which is the highest that we have seen since 2018. Now, when it comes to the block deal data, so far in 2023, close to 13,250 block deals have happened, which is still again not the highest. The highest was seen back in 2010, around 16,582 crore rupees, and the funds that the sellers have raised so far in block deals is close to 3.7 lakh crore rupees. Again, this is not the highest amount that we have seen. The highest amount was back in 2017, where close to 3.83 lakh crore rupees was raised via block deal. But most likely in 2023 will cross this amount, given the fact that a close to 3.71 lakh crore has been already raised by sellers. There are block deals worth around 8,700 crore rupees, that is today on December 20th, and given the fact that there is still a week to go by, this amount of 3.83 lakh crore that we had seen, which was the highest ever back in 2017, can be easily crossed via block deals. So keep an eye out for all the actions that we are seeing both in primary and the secondary market.
Much for that, Somit. That's an interesting data that you've collated for all of us. But let's hear out exactly what Almia had to say on the reasons behind the rise in the QIP inflows. What does it mean? Let's hear out the editor's take.
See, QIP is a different kettle of fish altogether. I mean, the QIP happens is because in QIP the money actually goes in the company, and this is not where retail participation is there. This is where institutional participation is there. So, in terms of an instrument, it's a very different instrument. In terms of the promoter block deals, of course, it's much higher. So, I don't think QIP is a trend indicator of the real excitement or real madness. Companies are raising capital, banks are raising capital, companies are raising capital, and typically when companies raise capital, you would always say that, look, the money goes in the company and that money would be utilized for growth capital.
Okay, so that's the take coming in from Nikunj Dalmia that QIPs are not a trendsetter, but given the rise that we have seen in the QIPs, there's the PE that is looking to exit, and lately a lot of counters have been in focus. So let's try and find out that what's in the store for the retail participants and any stock that still stands out. With this, let me welcome on board two of our very special experts, Vivek Karwa from Riddhi Investments, joining us on the fundamental side, as well as Kunal Bothra on the technical side as always. Very good morning to both of you. And Vivek, firstly, what's your sense on the rise in the QIPs? How do you see this? And lately, a lot of counters have been in focus. We had the likes of Apollo Tyres, Fusion, Canes. A lot of these counters have been in focus. So with the PE exiting through the QIP route, and there are fundraise plans by the company as well, any stock or any company that stands out where you believe that that there's further opportunity for growth from these levels?
Good morning, Shrishti and everyone. See, first of all, I would say that you cannot paint all QIP deals and PE exit deals or promoter buying or selling deals with same brush. It depends on company to company for what purposes the PE is selling or cashing out, or for what purpose QIP is coming out, and what would the company do of the cash which comes in. So as again Nikun said, QIP is not a big parameter for me. Because at some point of what is happening is the market is so bullish right now, and during bullish market you find host of IPOs coming in and such deals also happening. Even in past, be it Nykas or Zomatos or many other companies, we have seen that there were huge investments by even FIIs which went wrong. So not necessary that if somebody is coming in, it's a wise decision. First thing. More than this, I would look at promoter, what they are doing. If promoter is selling, then that would be a red flag for me always. And if promoters are buying, that would be a positive information on the company. So that would be bigger barometer than this QIPs. QIPs is today they are there. Who knows? Day after tomorrow they might again exit.
So that's an interesting take coming in from Vivek as well. Very good morning to you, Vivek. Good morning to you, Kunal. And Kunal, yes, I won't put you in the spot asking you about this, but I wanted to know where do you see markets headed? It's not only me. I'm sure all of our investors, all the viewers who are actually standing by, waiting by patiently, they want to know where is the market headed from here on. Do you see any scope of a correction, or do you see any scope of further consolidation in the markets, time-wise consolidation? And also, which are your top picks?
So, good morning, Cheryl, Srishti, as well as Vivek and everyone. So, my sense is that, we are in a very strong and a ferocious bull market. So, I think in this kind of a bull market, I would probably expect that we are just in that middle phase of, a strong uptrend, which I believe should last for many months on a trot. Now, on an immediate basis, I would probably expect 22,000, 22,200 as the targets for the Nifty before we actually start to expect a much more stronger bout of correction. So you might have those odd phases where the Nifty corrects by 100, 200 points, but I think that's best which one could probably expect from a near-term basis, because the indicators, the market makes the sector churn, still not indicating any kind of an overbought territory. Now, in terms of individual stocks, I would probably recommend a few names from current levels. I think HDFC AMC is something which has sprung up into a strong breakout candidate about the 3,200 to 50 mark where it's trading right now. So short-term traders could look at a buy even further from current levels. Voltas is something which I've been recommending since yesterday. That stock, I think from 890, 95 levels has now moved on to around 945, 950 mark. Still looks attractive from a medium to, short to medium term kind of a time frame.
Okay, so that's the view on the markets as well as Kunal's stock recommendation, and definitely Voltas is doing pretty well in today's trading session. But with this, viewers, it's time to slip into a very short break. Don't go anywhere. As we come right back, it's time to take all your stock-related queries. So stay tuned and start writing to us.
Welcome back. You're watching Buy Now, Sell Now on ET Now, a show where we get you answers for all of your stock-related queries. Viewers, you know what you got to do. You have to write to us. The WhatsApp number that's flashing on your screen and get answers to your stock-related queries. And to answer your queries today, we have Kunal Bothra as well as Vivek Karwa on the show. Once again, good morning to both of you gentlemen. And let me kickstart with this query coming in from Kabir Bedi. And Kunal, this one is for you. He's thinking of buying TVS Supply Chain Solutions at current market price for a holding period of about 3 to 6 months. He wants to know, is it advisable to go ahead with that sort of investment?
Not really. I think the stock is still languishing at below its key moving averages. I think if I'm not wrong, it's still trading below the 50 as well as the 100 moving average for itself. Which is still at 215 to 16 mark for the stock price. It's been an underperforming name over the last few months of the price history. So I would still suggest a wait on the stock. Wait out for a point when the stock crosses 215 mark. That could be a better time as well as a price-wise entry for TVS Supply Chain.
Okay, moving on, and Vivek, coming to you, this query is from Suresh. He's a long-term investor and he's been holding more than 200 shares of Adani Wilmar from a price of 377 rupees. Any outlook on this one, what to do, because he's been holding this for the past half an hour, 6 months or so, but it's still at his cost price. So what's the outlook?
Shrishti, as a disclosure, I have some holding in this, and I think the bad days are over for the company. The palm oil prices, which were really shooting up, have actually stabilized now, and the inflation pressures also have been, history now. So what I feel is, company right now is under this. Investors are under confusion that who is going to be the future promoter. Will Adani sell out? Will it be only Wilmar, or will the company go on as such? Whatever happens, I think shareholders would benefit. So hold it on. I think 420, 430 could be the target.
All right, Kunal, coming to you. This one is from Usha, who's writing to us from Karnataka, and she wants to know, a good time to buy IRCTC at current price, or should she wait for some sort of a correction to creep in?
I think you should hold on to the stock. You can buy at current levels. I think the correction may not be very severe for the stock price because the stock has apparently been high beta, but when a high beta stock generally tends to migrate into a breakout mode or into a trending mode, the beta drops down significantly for the stock prices. So I think in that aspect, I believe IRCTC may not be a high beta stock, at least over the near term, because of the way the stock has broken out. I think last week or start of this week so far. So my sense is that you should hold on to the stock or maybe buy at current levels. In case if there is a mild dip, say closer to 850, 860 mark, that could be a further point where you may have to average further.
Okay, moving on, and Vivek, the next query is from Panduranga Rao. He's been holding 4,000 shares of SJVN from a price of 70 rupees. The stock has already shown good momentum. Good to book out profits, or should he continue to hold on?
Should book out profits, particularly because water-related power generation, I mean hydropower, I'm not that bullish compared to other renewable power. And India is going to look at renewable power more than power which actually consumes resources. So I would not be bullish at it, and at 36,000 crores market cap, I think booking out profit would be sensible.
Kunal, this has come from Tina, who's been definitely following you pretty closely. She's saying that you had recommended Poonawalla FinCorp as a Diwali pick with a target of around 450 rupees per share, and she had already purchased that counter at levels of about 363 rupees per share. Now that the stock is actually nearing 450 rupees per share, she wants to know what should she do. Revise the strategy, should she continue to hold on to it or look to exit at this sort of a level? And also she wants to make a fresh entry either in defense or oil. Which one do you think is better? Should she look to invest in defense counters or in the oil space?
See, I think first of all, I think it's good that you bought Poonawalla Corp, and I think the stock is today has hit that 450 mark. So you can consider booking out major profits over here, because the stock may get into a mild bit of a correction. I'm not expecting a major correction, but I think it could probably get into a mild bit of correction. So I think since the targets have been met, it's good to try and book out profits. From the other part of your question, whether to look out for stocks in the defense or in the oil space, I would actually look out for something in the oil pack, so and specifically the OMC names, which I believe are heading towards a classical kind of a trend signal. So, we looked at many parameters for these OMC stocks across the board, across multiple time frames, daily, weekly, as well as monthly charts, and they are showing an exceptional change in terms of the behavior traits which these stocks have been erstwhile accustomed to over the last many years. So that generally is a sign that maybe the near term as well as the medium term outlooks have changed significantly for these stocks. I think BPCL, HPCL, IOC, all three of them, they look attractive. So you may probably pick, if you ask me to pick maybe a couple of names, I would probably prefer IOC and BPCL from the pack. But if you have liquidity, you could ideally try to time all three of the stocks from the pack.
Okay, but Kunal, coming to you, what's your take on Whirlpool? All these white goods stocks are showing good moves from the likes of Voltas, Havells, etc. But Whirlpool is quite flattish in trade today. The Madhusudan is been holding 90 shares from a price of 2,170 rupees. Any price where you believe that she should average this particular counter, or at this point in time cut the losses and move out?
See, you can hold on to the stock. I would not suggest to cut the losses over here. Now, the only concern is that the recent sell-off which had happened for Whirlpool from, I think, 1750 levels to currently 1300, 1350 mark has been quite stark. We've generally seen that whenever a stock gets into such a kind of a sharp selling, it tends to remain into a consolidation for few months. So I would not be surprised that for the next maybe couple of months or more, the stock may actually languish at this 1300 to 1350 range, plus minus 50-100 points for the stock. But I think an eventual breakout about the 1600-1650 mark, which is the 50% retracement, could lead to a start of a fresh trend for Whirlpool. So I'm not sure when that could happen, but I think as of now, you can just continue to hold on. Only about the 1600-1650 mark is where you should look to average for the stock.
All right, this one is coming in from Rajesh Kakkar, and this one is for you, Vivek. He wants to know if he can add Edelweiss at current breakout levels. He's already holding about 250 shares at a price of 81 rupees per share. Fundamentally, he wants to know, does it make sense to add some more in his portfolio and hold it for the longer term?
See, if it is absolute long term, I would advise you to buy on every dip, not enter the stock right now, because market is too high. And see, again, you are taking double risk. Generally, what happens is, as a financial services company myself, I avoid such companies wherein they also have exposure to the markets the way same have. So if market dips tomorrow, these companies also will suffer. Their AUMs also will come down. There are many other related issues. So I would suggest on dips, because the company is really doing well, but not at these prices.
Okay, so that's the take on Edelweiss. But with this, viewers, it's time to slip into a very short break. Don't go anywhere. We'll be right back.
Welcome back. You're watching Buy Now, Sell Now on ET Now, and let's continue taking all of the stock-related queries. And this one is coming for you, Vivek. This one is coming in from Sagar, and he wants a view on ACE Escorts as well as Sangvi Movers. He's saying that he wanted to play the theme, proxy theme in Infra space, so he's holding a good chunk of ACE at the levels around 58, Escorts at 820, and Sangvi Movers at 79. Now he wants to know, what's your growth outlook for these counters? And when talking about growth, he means earnings growth outlook for all of these counters. Are you expecting the growth, the momentum to continue for all of these counters, or do you see some sort of a headwind actually coming in at play? And also, do you have any other stock in mind which he can actually look to add in his portfolio for further gains?
Sharil, if you look at the broader view, see, I have many clients who are into heavy equipment business and even earth movers. So the feedback is when golden quadrilateral was happening in 2000, I think 1999, at that point of time, what kind of orders they had, similar kind of orders companies have right now. So the sector is very bullish. I think infra is something which is going to really say go on full throttle for next at least 5 to 10 years. So please stay on this counters. Don't exit them. Yeah, some of them look costly at these valuations, but yes, corrections will keep coming and going. But the sector is in, in growth mode and will continue to be so.
Okay, moving on. And Kunal, the next query is from Prashant, and he's been holding 100 shares of Supriya Life Sciences from a price of 282, and he also has Dwarikesh Sugar at a price of 92 rupees. Do you believe that both of these counters can give him at least 20 to 30% return in the near term, or rather he should make a switch to any other stock, and also any stop loss levels for both of these names?
So I think you can continue to hold on. Supriya, I think, looks attractive in the sense the stock is forming a flag pattern on the daily charts. The recent breakout of the move from 240 levels to 290 approximately, and then a mild 10-15 point of consolidation. I think that augurs quite well for the stock. So a breakout back again about 290 levels should take the stock higher to, I think, 320, 330. So you can wait out for a target of say approximately 320, 330 for Supriya Life Science. And for Dwarikesh, the stock is showing some sort of negativity in terms of price performance. The recent trends have also been negative for the stock. I would suggest that you should either look to add only if the stock crosses above 97.5 to 98 levels on the upside, or at best, I think if you are looking to shift, then I would recommend either EID Parry or maybe Balrampur Chini at levels if it crosses above the 420 mark.
All right, this one is coming in from Sri, writing to us from Cochin, and Sri is holding Cipla as well as Torrent Pharma in his portfolio currently. He wants to add 1 to 2 more pharma stocks which are fundamentally strong, but his time horizon is just 6 to 12 months. Kunal, if you could help him with good names, quality names in the pharma pack that he can add to his portfolio. Also, he wants entry levels.
So I'm not sure if you're looking out for only larger cap names, but I think if you're looking at from the mid cap end of the pharma stocks, I would recommend Glenmark Pharma, Zydus Life, even at current levels. I believe that these stocks are showing signs of strong breakout. They've gone through that patch of consolidation for themselves. So both of them, they look attractive even at current levels, specifically from a medium to long term time horizon. Even Granules from the mid cap end has started to show signs of a breakout, specifically about the 400 mark. So may not be a best price to buy the stock, but in case if it dips down to say 380, 385, that could be a point where you may look to start entering Granules as well.
Okay, Vivek, the next query is from Ghosh Dada. He's been holding 1500 shares of Gandhar oil from a price of 280 rupees. That's a new listing on the bosses. How do you see the future of this particular counter, and any targets if you have one?
See, compared to, in fact, if you look at Oil India today is almost like 14-15% up. So what I feel is this oil refinery companies as such are going to do well, and particularly because crude oil also is stabilizing at this point of time. So hold it on. Stock surely doesn't look cheap compared to PSU companies, but yeah, it will keep commanding the valuation, say a little higher valuation because it's a private sector company. So please hold it on.
Even Vijay also has Gandhar oil at a price of 320, elevated levels compared to the previous viewers. Your advice still would be hold it on, Vivek?
No, see, the view is always on the company, not on the price. He might enter at wrong pricing, but if the company is good at these levels, I think he should hold it on.
All right. Let me take this next query that is coming in from Yuvraj from Chennai. He has card trade in his portfolio with a 10% loss, Kunal. Wants to know whether he should stay put with this one or should he look to sell or average out at these levels? And also, can he look to enter IRFC right now?
So I think very short-term history for card trade, but whatever I could probably sense over the last 2-3 months specifically for the stock, it's been a stock which has gone through a recovery path. So I think from 400 levels to now 900 plus, where the stock had recently made a high, towards a point when the stock has now gone through a correction. So I think it looks quite okay on the charts. You may continue to hold on. I would not suggest to average at current levels. In terms of the other name which you mentioned, IRFC, yeah, I think that stock is looking attractive. But then the recent run up in the last 3 or 4 days has been very swift and sharp for many of the tier 2 railway names, IRFC, IRCON, RVNL, etc. So I would recommend that if you're looking to enter the stock, maybe closer to 94, 95 could be a better entry point.
Okay, but what's your take on Aavas Financials, Kunal? Pawan from Hyderabad wants your opinion on this one. He's looking for a 1-year investment in this counter.
See, again, a stock which is corrected very sharply from 3,200 levels to now 1,500-1,600 mark, where it's trading major consolidation for the stock over the last 6 or 7 months. I think if I'm not wrong, in the month of May or June, the stock had fallen down to sub 1,400 levels. At least right now, it's not retested the previous lows on an exact basis, made a slight higher low, and is trying to get into a support territory. The only concern with the stock right now is the volumes are missing. So when volumes are generally higher than the stock forming a previous bottom, we expect the stock to bottom out quickly, but because of the lack of volumes relatively as compared to the previous low, I would sense that the stock may take some bit of more time to consolidate. So just hold on to the stock. Doesn't look like an average candidate at current levels.
All right, this one also is coming for you, Kunal. Sorry, this one is coming in from a viewer, Ranjit from Gurgaon, and he wants your view on Aarti Industries. 200 shares at a price of 585. Can you hold for the next 3 to 6 months?
See, you can hold on to the stock, but my again the Aarti Industry is something which you bullish on for a positional target of 600 broadly. The stock is above those 600 levels. I think I would probably sense that this is a good time to book out profits. Since you've entered late into the stock price, that's the only concern. I would suggest to maybe buy back again if the stock dips down towards 575, 580 levels.
Okay, the next query that I have, Vivek, is on Shyam Century Ferrous. I'm not sure whether you tracked this one or not, but Ravi Chandran has bought 1,000 shares at a price of 19 rupees. Can he go ahead and further invest in this particular account? I believe it's a penny stock.
The penny stock just 441 crore market cap. And even on face of it, I'm not tracking the company, so that should be the disclaimer. But even on face of the say valuation, I think it is costly compared to its peer group. So that's the only recommendation I can give right now.
All right, this next one is coming in from Rita from Kolkata, and this one is for you, Vivek. Now, she wants to do SIP in PSU banks with a time horizon of about 2 years or so, but she wants your suggestions on which stocks should she do that SIP in.
Say, I would suggest her to invest in PSU bank mutual funds, wherein you will have at least 8 or 9 PSU companies wherein the fund invests, and whichever company does well, you're going to benefit out of it. So I am overall bullish on the PSU space, but singling out one company for long-term SIP would be a difficult task. So PSU mutual fund would be the best idea she should adopt for.
Okay, Kunal, coming to you to have your take on delivery. This query is from Pooja Kumar from Kolkata, and Pooja has shared her long list, but I cannot take all the stocks, but taking one of them, that is delivery, where she has bought 100 shares at a price of 442 rupees. She's sitting at a loss in this one. What to do with this?
See, hold on to the stock. Again, it still continues to be into a downtrend. Now, the only reason why I would suggest the hold is because of the divergence the stock is now showing with respect to its key moving averages. So, for example, I think the 100 DMA for the stock is almost at 410 mark. The stock is at 360, 375, which means there's a divergence of almost 10% for the stock, 10-15% from its key moving averages. So when you see such kind of a sharp divergences, the stock generally tends to narrow down into the divergence and tries to cover up. So in that aspect, you might see some bit of more rally into the stock price, but it would just be a short-term rally because the structure is still into a downtrend.
All right, Kunal, this one is for you. No, actually, I'll take this one to you, Vivek, because Gautam Bala has ITC 30,000 shares at a price of 144 rupees per share. He wants to know whether he should continue to hold or book profits. He has a target in mind for ITC, and the target is 1,152 rupees per share. He wants to know, will this be achievable in the next 5 years, and should he stay put with this, or should he use this opportunity to book our profits?
No, I see if you're so confident and giving a target which is fancy number 1152, I don't know, it is numerology or technical analysis or what. But if you have such kind of target and then you ask about shall I book out profit is oxymoron question. See, ITC would continue doing well. Now, it was stagnant for many years and then it did well and again it is stagnant. It can be stagnant again for 1 or 2 years. But FMCG as such will continue doing well. And as the rural India progresses, I think the company should do well. But doubling in next 5 years, I don't think so. It is a really tough task because you're talking about market cap of almost 12 lakh crores, which is too much of asking. Yes, it will give you more than market. That's what I can say.
All right, give you more than market. Kunal, what's your view coming in on ITC, given the fact that you have been one of the huge advocates of buying into ITC, and for the last 2 or 3 years, you've been actually, if Rajesh would have been there, I would have said you've been screaming from the top of your building in Mumbai that you must go ahead and buy ITC. Looks like Gautam has done that, but 1,152 anywhere on your charts, can you see those numbers?
I was just adding the digits. I think it totals to 9. So maybe I am sensing that it's a sort of a lucky number which the viewer is looking out for. But again, I'm bullish on ITC, and I'll agree with Vivek over here to a larger extent that I think the stock would probably get to a steady returns over the next 4 to 5 years. There could be a chance that the stock may double from current levels, but that could only happen if you see a very strong, ferocious bull market lasting to that kind of a time frame, as well as many of the FMCG stocks cumulatively or in a synchronized manner looking attractive. So hold on to the stock is what I would recommend. Difficult to project such kind of extreme targets at current levels.
Okay, so that's the fundamental and technical take coming in on ITC. But with this, viewers, it's time to slip into a very short break. Don't go anywhere. We'll be right back.
Welcome back. You're watching Buy Now on ET Now. Let's continue taking your query. This one is coming from Tina Kunal, and this one is for you. She has Fine Organics 25 shares purchased at levels of 4,831 rupees per share. She wants to know whether she should stay put with Fine Organics or exit the counter right now.
See, I'm bullish on Fine Organics, and I think my sense is that many of these similar stocks are getting into a resurrective mode. Now, it's a good point where you will have to start considering to average the stocks at current levels, or maybe wait out for another 4-5% kind of a dip or a mild correction, if in case you get that chance in a stock like Fine Organics, because I think the structure for the stock indicates a major bottom formation at place. If you're a patient investor, say with a time frame of 6 months at least, I would expect the stock to come back towards 5,100 to 5,250 kind of a range for itself. So maybe good starting point at current levels, as well as add-on dips for another 4 to 5% on the downside.
Okay, Vivek, the next query is for, it's on Total Gas, and I would like your take on this, Kunal, as well, because this query is from Hitesh, and he's been holding shares of Adani Total Gas from a price of 660 rupees, and this is 5% of his portfolio. He's a long-term investor. What to do and what's the outlook?
Stock, if you look at valuation wise, it's quite costly. In fact, last week, I think it was around 800 levels. And from there, again, it has rallied and trading at almost 200 PE. So among Adani stocks, this seems to be the costliest. But what I feel is if you're a long-term investor, you can still stay put. Why? Because the company is bagging orders regularly, and the price earnings will slowly come into the company. So future looks good, but present looks quite costly, and hence you got to decide if you're long term or short term. If you're short term, surely book out.
All right, next one is for you, Kunal. This was comes from Satya. He's saying that under this bull run, 3 of his stocks are still negative, and the negative return is about 2 to 5% or so. He's invested in TTK Prestige, ABFRL, and Sterling Tools. He wants to know whether he should stay put in these counters or look to switch to something else. And switching is what he's asking is, should he go to Prakash Industries or Patel Engineering instead?
So I think out of the 3 names, TDK Prestige, Sterling Tools, ABFRL, I would suggest you can continue to hold on to TDK Prestige and ABFRL. They're still relatively more stronger charts. I've not tried Prakash Industries, recently, so I'll skip that. But I would probably recommend few of the other names. Something like, I think, for example, Voltas looks attractive at current levels if you're a medium-term investor with a time frame of 3 months or so. If you're looking at a slightly different candidate, then I would still recommend PSU banking stocks, and I think you can probably go with SBI or PNB at current levels.
Okay, moving on to the next query then, and this one is from Anju from Dubai, and Vivek, he wants to know, she wants to know that it is advisable to enter NMDC at current levels.
See, the mining space as such is still work in progress. And you had a query on Prakash Industries also. All these companies will do well because fresh coal mines and even metal mines, particularly iron ore mines, are coming up for auction, which were in trouble because of various judgment and scams related to past. So as and when that happens, I think this companies, all metal sector overall should do well. So NMDC included.
All right, with that, let's kickstart with the rapid fire then. And Kunal, the first one is for you from PR Buyan from Kolkata, and he has 940 shares of Moltech Packaging at 255 rupees per share. Should he stay put with this one or look to book out profits?
I think you can continue to hold on.
Vivek, Bishaka has been holding 20 shares of Angel One from a price of 1,559 rupees. Good to book out profits or continue to hold on?
Book out profits.
Okay, Kunal, this one is coming in from one of our viewers who has December futures of ICICI Bank at 1020 to hold, or what's our strategy?
Hold on.
Okay, Vivek, a viewer, Tushar, has been holding shares of BSC, 40 in quantity from a price of 460 rupees. Wants a long-term view on this one. Book out profits or continue to hold?
Book out profits and re-enter at lower levels.
Okay, another one for you, Vivek. Tata Tech is the counter. Dayanand Sanil from Mangalore has shares at a price of 1,342. Do you think makes sense to stay put with this one?
Sell and take the money home.
Kunal, Subrata Mukherjee wants to know, can he buy Petronet LNG for short term?
Well, yeah, I think it's a good stock. Considering the recent charts, I would probably suggest a buy.
Okay, RK wants to know between Hindustan Copper, Arvind and Devyani International, which one should he look to buy for a time frame of about 2 years, Vivek?
Hindustan Copper looks good. Maybe 240 should be the target.
Okay, Kunal Bhagwan wants to know the take on MTR Technologies. Can he enter this counter for next 6 months?
Not at current levels, but out for more time-wise consolidation.
All right, this one is coming in from Pavitra, and Pavitra has got India Shelter at the IPO. Wants to know whether she should actually stay put with this counter for even longer. Today was the listing. Vivek, have you seen this one by any chance?
Say it's a tough call today because the listing is superb. I think you should book out profit for once.
Okay, Vivek, what's your view on Honeywell Automation? Venkat from Dubai has been holding 5 shares from a price of 35,000 rupees. He can continue holding it for the next 1 year, but what should be the outlook?
41,000 should be the target.
All right, with that, we come to the end of the rapid fire as well as the queries. Thank you so much, Kunal, as well as Vivek, for joining us on the show and taking or answering all of the stock related queries. And viewers, if we have not been able to take your query today, please don't be disheartened. We will be back tomorrow, and hopefully you've actually benefited from the queries that have already been answered by our experts, isn't it, Shrishti?
Well, yes, absolutely. There are many queries pouring, but definitely we'll try to take as many as possible today as well as tomorrow. But with this, viewers, it's time to wrap this edition of Buy Now Sell Now. It's a goodbye from me and Cheryl and the entire team who put this show together. Thanks so much for watching, but don't go anywhere. Market action continues with Markets at Noon.